Hi, Bill Moore here, and today we're going to do a little thought experiment. I would like you to imagine that you are a graduate student, say in physics or chemistry or something, and your goal is to be a scientist and save the world. And your first project, in fact, is to track the motion of buffalo. So being a high-tech sort, you hire somebody to go put some GPS equipment on a buffalo so you can monitor and see the motion, track it right to your computer. And this is what that might look like. And here it is. Here's our first buffalo. We are going to call this one Buffy. And we are going to track, monitor, record all the motion of Buffy. So we are looking for patterns, but what we actually find is that it appears that Buffy basically is just taking a random walk. We can't find any particular pattern whatsoever. So with that in mind, we decide to double our data and track two buffalo. So we put a second buffalo. Oh, there's Buffy up at the top, and here down, we're going to call this one Jody. So we're tracking Buffy and Jody, twice as much data, hopefully some opportunities for finding patterns. And guess what? We find once again that they each appear to be moving randomly. There are some moments where they look like they're moving, somewhat together, but in general, we don't really find what we're looking for at all. We find random motion. So I guess then we decide we have to get primitive, and we are going to go track all of the buffalo. We are going to take a look at the entire herd. And all of a sudden, by looking at the entire herd along with Buffy and Jody, we have what might be called a eureka moment. The fact is, it's the herd that's moving in a random walk. It's not the individual buffalo. The individual buffalo are moving randomly, but focused on the center of the herd. They can move out to the edges of the herd or to the center, but they are moving around the herd, and it's the herd moving randomly. Therefore, we can think about it like the whole herd might move because of predators, or they might move because they're seeking out food somewhere, or perhaps they're heading south for the winter. But the whole herd is what is moving, and the other guys are moving around that herd. That creates something we can use. For example, now we understand that unlike the actual GPS coordinates of Buffy or Jody, the relative position of one to the other is a variable that has meaning. So if we measure the maximum and minimum distance between Buffy and Jody for every 1 hour period, and then we put those numbers on a chart, we fully expect to find something with a stable mean and standard deviation. And that is exactly what we see. So here we see a chart of the distance between Buffy and Jody using 1 hour time increments. It shows the maximum and the minimum during that time frame and whether the change was up or down. The blue line in the middle is a 200 unit moving average, and the purple and kind of orangish colors, whatever that color is, are the standard deviation numbers above and below. So you can see that this is what we were expecting to see, right? A very stable mean, very stable standard deviation lines. And you can see also that when the distance of Buffy and Jody were, say, inside of the first standard deviation lines, then you have quite a random motion. But when the distance got to either extreme, either outside the second or outside the second above or outside the second below, you can see that there is a definite scampering, if you will, back towards the center of the herd or back towards each other. So that is what we were expecting, and that is what we found, and it turned out that it happens every time. So how does our understanding of the motion of a buffalo apply to the financial sector? First, let's mention the motivation. What we saw was a very strong tendency for mean reversion, probably measuring both from the center of the herd to any particular buffalo and the distance between two buffalo, which is the example we actually made. If we can create mean reversion, we've got something very powerful. So how is it that we can identify a herd of buffalo, if you will, in the financial sector? Well, it's all about behavior, right? So as an example, when the wolves came out, all the buffalo had a certain behavior. Probably there were some antelope in the herd as well, and they reacted to the wolves, but they reacted differently than the buffalo. So you might say, well, in the financial sector, these things aren't dressed up as buffalo. It's hard to identify. Well, the fact is there's some nice mathematical techniques out of linear algebra that help us take time series of data in the financial sector and do exactly that. They identify what are the risk factors, what are the things that are affecting the prices of all those guys, and they can help us identify which symbols behave the same. In other words, by looking at many, many products, we can create groups of things that, well, let's call them buffalo, or let's call them antelope, or let's call them ground squirrels, whatever. But but we can create baskets of products that be with very, very similar behavior. If they have similar behavior, then the concept of mean reversion that we discovered by watching the buffalo should hold true. And in fact, it does. Well, I hope you enjoyed our story of Buffy and Jody and the herd of buffalo, and I hope the analogies to the financial sector help you better understand relative value trading. You know, when we take a look at this, though, I think there's another story to be had, and that is that, in this case, our budding young researcher, whose job was to understand the motion of buffalo, went out and promptly began studying exactly one buffalo. And it seems silly to us, right? It seems like we should always be looking at the entire herd if we're talking about studying the motion of buffalo. And yet, how often do we do exactly the same thing when we're studying financial products, right? We take exactly one symbol and we track it and we look for patterns and we do all kinds of things. And yet what we should have been doing to begin with was to take a basket of products, of highly related products, and seeing how they all move and how the relationship between individual products in that basket move, etc. And that is where you're going to find real edge that exists all the time. So I'm going to encourage you, please take a look at our videos. Watch what we do on YouTube, subscribe to our channel, like us, you know, tell your friends about us, right? But please use this to get an opportunity to find extra edge in your trading. So thank you for watching and good luck with your trading. Bye.